Hello, my name is Alwin Ng and welcome to Market Apprentice. Today we'll be talking about trend lines. Trend lines is another type of support resistance that you need while trading. Enjoy! Definition of a trend line. Trend line is a line that is drawn above pivot highs or below pivot lows to show the prevailing direction of price. Trend lines are most effective if price action has been respected for at least 2 times or more. Just to be clear, make sure that these touches are significantly spaced out before they are taken into consideration. And I'll show you a few more examples in the diagrams later. Meanwhile, just remember that respecting trend lines is very important before the trend line is considered valid. Just a brief reminder, price very often travel towards the trend line or away from it. However, price will also consolidate around it. Remember always to trade the bounce. Trade the start of a with trend phase. That's the best and most profitable trade. Ignore price if price breaks a trend line with momentum, i.e. there's a clean break on the trend line. Again, I'll elaborate this a little bit further when we look at the charts. So let's begin. A downward trend line acts like a slope or a tilted ceiling. In other words, you need to make sure that trend line is drawn above price. We need 2 or more touches. To start off, remember price cyclicity? That's right. You need to remember to identify price cycles. Identify where's phase 1 and where's phase 2. This is a quick example of how price will cycle when it goes downward. There are with trend phases and there are pullback phases. However, in this price cycle, what we're looking for are pivot highs. In front of us, I can see one pivot high, and this is the next pivot high. Once you have these 2 pivot highs, we draw a straight line over it. As mentioned in the definition, we need 2 or more touches, and these 2 touches will give a confirmation of a trend line. Once we have that, we identify the end of a pullback again. In this example, the third touch happens somewhere here. And here is where we take the short. In front of us is the Sure PLC daily chart. Looking at the chart, we have first on the top left-hand corner 2 touches. However, remember one of the definitions where make sure those touches are significantly spaced out before they are taken into consideration. In this case, the first 2 touches, or first 2 pivot highs, are quite near each other. Hence, in this situation, we assume that's the first. Moving slightly down, we see the second touch. Now that we have 2 touches, we're able to draw the trend line. And the third touch is where we take the trade to go short. After the third touch, there was a clean break around here, and this is where the trend line becomes invalidated. And this is where we as trend traders stay out. Next chart is a Euro-Yen daily chart from April 2011 to October 2011. In this example again, we first have the first touch on the top left. The second touch happens here. As soon as we have 2 touches, the trend line becomes valid, and from here onwards, we can trade the third touch. In this example again, we have what we call a clean break. Price went strongly above the trend line becomes invalid. From this point onwards, we find a different chart to trade. In case you're wondering, I have deliberately ignored this part here because this is known as the false break. A false break is the opposite of a clean break. In other words, price never really broken above the trend line, hence it was ignored. I will be discussing more about false breakout as we continue along the lessons. Upward trend line. An upward trend line acts like a slope or tilted floor. That means we draw the trend line below price. Like the downward trend line, it is required to have 2 or more touches before the trend line is valid. Again, the key is to identify price cyclicity. Price cycles in a with trend phase as well as a pullback phase. Here is a quick example of price cycling up and down. As you can see, we have 2 pivot lows. This is the first pivot low and the second pivot low. Now that we have 2 pivot lows, we can draw a trend line, and this trend line is valid. Now, from this point onwards, we wait for the third pivot low. Essentially, we are looking for the end of the pullback phase and to take the trade in the start of the with trend phase. In this example, we take the trade in this area and we go long. In front of you is Wire Group PLC on the daily chart. As you can see, we have drawn a few touches, but looking back in time, the first touch would have happened around here. Moving to the center of the chart, this is the second touch. Now that we have 2 touches, the trend line becomes valid. Hence, we wait for the third pullback. We wait for the pullback before the third touch, and we take it long from here. On this occasion, price pullback for the fourth touch. Here, this trend line is still valid, and we take another long. And this is the fifth touch, and another long. This is an Aussie US dollar 4-hour chart from January 2012 to February 2012. Looking at an example in front of us, the first touch will probably be around here. The second touch will be around here. And from the second touch onwards, we have a valid trend line. So from this point onwards, we wait for the pullback. Here we have the third touch, and we take it long. Here we have a fourth touch. We take it long again. Well, in this example, we have another break of the trend line. Price came down with momentum, and this is what we call a clean break. Now that we have a clean break, we stay out of the chart and we find something else to trade. That's it for today. Once you finish the video, here are a few tasks for you. Pick 3 currency pairs and identify an upward trend line for each of them. Once you're done with that, pick another 3 currency pairs and identify a downward trend line for each of them. If you have any other questions, please post in the box below. That's it for today. Thank you very much, and hope you enjoyed the lesson.